Something significant just happened in the Nigerian financial market. And if you own stocks, you need to understand what it means. The Central Bank of Nigeria just reversed a 2019 restriction that has been keeping everyday Nigerian investors out of something called OMO bills. OMO bills are short-term government instruments that are currently offering returns of over 20%, guaranteed, low risk, and CBN backed. Now, local retail investors like you and me can access them for the first time in years. This sounds like good news, and in many ways it is. But there's a very important side effect that every Nigerian stock market investor needs to understand right now. Because this change could affect the value of your portfolio in weeks and months ahead. I'm Victoria Abioye, Money Mindset and Life. Let's get into it. First, what exactly is OMO bill? OMO stands for Open Markets Operations. It is a tool the Central Bank of Nigeria uses to control how much money is flowing through the banking system. When the CBN wants to reduce excess cash in the system and to control inflation and stabilize the naira, they sell short-term securities called OMO bill to banks and investors. You essentially lend money to the CBN for a short period, typically a few months, and at the end of that period, they pay you back with interest. The key word here is guaranteed. This is the Central Bank of Nigeria here, and the risk of defaults is virtually zero. Right now, OMO bills are offering returns over 20%. To put that in context, a regular savings account in Nigeria pays roughly 1 to 2% annually. The United Capital Money Market Fund that I've talked about before currently offers about 15 to 16%. OMO bill at over 20% from the CBN itself is genuinely significant. In 2019, the CBN restricted access to OMO bill and limited them to banks and foreign portfolio investors only. Everyday Nigerian retail investors like us were locked out. And last week, that restriction was reversed. Local retail individuals, corporate bodies, and non-bank financial institutions can now access OMO bill through their deposit money banks. This is a significant expansion of access. For the first time in years, you and I can compete for the same high-yield instruments that banks and foreign investors have been enjoying. Now, here's the question I know every Nigerian stock market investor is asking. What does this mean for my shares? And my honest answer is we need to watch this carefully. Here's why. When a low-risk investment starts offering high returns, it creates what economists call a fight to yield. Money moves towards safety and high returns. Think about it this way. If you could get over 20% guarantee from the Central Bank of Nigeria, virtually zero risk, why would you take the risk of putting your money in stocks that might return 15% with volatility? For many investors, especially large institutional ones, that calculation changes dramatically. Asset managers, pension funds, mutual funds, these organizations manage other people's money. They have a legal obligation to protect it. When OMO yields spike above 20%, these funds routinely rebalance their portfolios. They sell portion of their stock holdings and move that money into OMO bill. High volume selling from large institutional investors puts downward pressure on stock prices. We could already be seeing the beginning of this. The NGX saw significant sell-off in the same week the announcement was made. This is not a crash. It is capital reallocation. And understanding the difference is what protects your portfolio. So what should you actually do with this information? 1, don't panic sell. If your stock dips in the coming weeks, that dip may be a direct result of institutional money rotating into OMO bills, not a sign that the companies you own have suddenly become bad business. Temporal price drop does not change their fundamentals. 2, watch out for buying opportunities. When instrumental investors sell quality stocks to chase OMO yield, they leave behind fundamentally strong company at temporarily discounted prices. This is exactly the kind of moment long-term investors look for. Do your research, be patient, and be ready. Consider diversifying into OMO bills yourself. I have not personally invested in OMO bills before, but this policy change has made me curious. Over 20% guaranteed interest from Central Bank of Nigeria is worth exploring as part of a balanced portfolio. Talk to your bank and stockbroker about how to access it. 4, think long term. OMO bills rates will not stay at over 20% forever. As inflation eases and the CBN adjusts policy, those rates will come down. And when they do, that institutional money flows back into the stock. Patient long-term investors who held their position will benefit from that recovery. The stock market and fixed income instruments are not enemies. They are different tools for different goals and different seasons. The CBN's OMO bill reversal is one of the most significant policy change for Nigerian retail investors in years. It opens a new door that were previously locked away from us, but it also creates short-term pressure on the stock market as capital reallocates towards safety and yield. Understanding both sides of this story, access to high-yield government-backed returns, is what separates a panicking investor from a strategic one. I'll be watching this closely and share updates as things develop. Drop a comment below. Are you thinking about exploring OMO bill, or are you staying focused on stocks? I want to hear about how you're thinking about this. Share this video, put it on your WhatsApp status. Every Nigerian investors in your circle needs to understand what just changed. Subscribe if you haven't already. Follow me at Victoria Abioye. I'll see you in the next video. Let's keep building together.